Good morning, ladies and gentlemen. Welcome to Entertainment Network India Limited Q4 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Pandey, MD and CEO from Entertainment Network India Limited. Thank you, and over to you, sir.
Thank you, Razan. I come to this very unique conference call on a Saturday. In my last so many years, I don't remember doing this conference call on Saturday, but such are the times that we adjust to it. So thank you very much for attending this on a Saturday. We truly appreciate that. Now, I will just take 5-7 minutes to explain the larger narrative on the quarter's performance. The most important point that I would like to make and request you to note is that the quarter 4 was very badly affected by the Omicron virus at the beginning of the quarter, and as you will recall, the impact of that virus lasted till about the 10th or the 12th or the 15th of February. So approximately half the quarter was pretty badly hit by the Omicron variant. So I am going to give you a split of our revenue segments by the first 45 days of the quarter and the second 45 days of the quarter to show to you what impact the variant had on our quarterly numbers. Now, first, our overall quarterly revenue number was 99.4 crore rupees, and this reflects a 0.3% growth over the same quarter last year. Now, remember, last year was a perfectly fine quarter because there was absolutely no impact of COVID. In fact, COVID impact had not been there even in Q3, and therefore the Q4 of last year actually reflected 6 good months of the business. This quarter, as I mentioned, began with 45 days being destroyed by Omicron, and despite that, the revenues of the company have remained flat, which I think is a big positive point in the results that have come out. But let me give you the split of this 0.3% by month. Now, at an overall revenue level, January was down 28%. So please note that we began the quarter with negative 28% in revenues. February was down 2.5%. As I mentioned, the impact of Omicron continued through the middle of February. But look at how strongly we rebounded in the month of March. When the impact of Omicron was over, retail establishments opened up and business became normal. In March, our overall revenues were up 20.4% compared to last year. So this should tell you that the quarterly numbers have to be seen as the first 45 days and the second 45 days, which is, or if for ease, you can look at it as January, February as pandemic hit and March as a regular quarter. Now let me give you the same split for our two components of the business. One is of course radio, and the other is what we generally call non-FCT or solutions business. The radio business number has grown by 7.6% in this quarter, which is absolutely fantastic because radio is the main breadwinner for the company. It is the most profitable part of the company, and therefore when radio grows, it actually suggests in the future also one can expect profitable growth to happen. But again, let me give you the split of this 7.6% by month. In January, the revenues were down 2.2% compared to last year. In February, the revenues were up 15%. And in March, the radio revenues were up 11%. Now, please note that radio is just a button. You can turn on the advertising and turn off the advertising in a phone call coming from the advertiser. So when the pandemic lifts, then the advertisers are quick to call, and that is why in February we have shown a growth of 15% despite Omicron very much being present for half the month, because it's easy to turn on radio advertising. Now let me show you the non-FCT split. Non-FCT for the quarter or solutions business for the quarter was down 11.4%. And this 11.4%, you will understand from the quarterly split how significantly hit it is by Omicron, because when government stops giving permission for on-ground events, when retail establishments are stopped, when celebrities or performers refuse to perform because of the scare of the COVID, then you will see the impact of that on our results when I explain to you by month. While overall solutions was down 11.4% in the quarter, in January it was down 61%. In February it was down 50%. Remember, in February, after COVID, after Omicron restrictions were lifted, clients will then start planning activities. Solutions business takes longer time to roll out, and therefore even February was very badly hit at 50% negative growth. But look at March. March we staged a smart recovery with a 3% growth in revenues compared to March last year. So clearly the results of the radio segment, the non-FCD, the solution segment, as well as the total revenues show to you the impact of Omicron variant on January, February and March performance. And the good news is that the strong results of March are continuing in the beginning of this quarter, because this is the first quarter in 3 years now which has not been affected by COVID. So we are seeing we are on the cusp, I believe, of a very strong rebound happening in FY23 and beginning with the first quarter for a change. Now 2 points more. One is that remember my radio percentage growth of 7.6%. Please keep that in mind, because other radio stations, when they will announce their results, they are largely radio companies, and therefore the comparative number would be 7.6% for you to look at. That's the first point. The second point I just want to repeat from what I have been saying for many quarters is that I believe that radio is entering a period of golden period of growth in FY23 and possibly in FY24. And I'll tell you why I say this. I say this because FY23 and FY24 are expected to be sluggish years of economic growth. You are very well aware about all the headwinds that the economy is facing. And secondly, that the shops are now expected to remain open because the pandemic is now hopefully behind us. Now, whenever the economy is sluggish, but the shops are open and functioning, radio does very well. And the reason for that is simple, because brands and advertisers put more emphasis on generating footfalls, on clearance sales, on giving discounts, and for all of those things, radio is a primary medium. And I say primary because much of this happens on a frequency basis. You need to remind the people again and again that some great offer is available, and that is why radio works the best. It's a local medium and it supports the retail establishment. So I think FY23 and FY24 are going to be golden years for radio, and we've seen the beginning of that in March of this year, and I mentioned to you that it's continuing in April of this month. So I thought that I will mention this splits to you. Now, if I were to look at product-wise that the solutions business got hit, the biggest product which got hit by the solutions business was what I call my television impact properties, which are shows that I create and take to television. Like the Mirchi Music Awards in Hindi is the only event is the only award show that happened in the quarter. None of the other big award shows, whether it's Filmfare, whether it is IFA, could take place because of Omicron. But we pulled off Mirchi Music Awards Hindi. We also pulled off Mirchi Music Awards South, and we also pulled off Mirchi Music Awards Punjabi edition in this quarter, which is a tremendous statement on the traction that these event brands have got for them. Unfortunately, we were not able to pull off some of the other events, which are the Mirchi Music Awards in Marathi, the Mirchi Music Awards in Bangla, both of which are happening in this quarter now. But we also could not pull off two other very large and profitable properties of ours, which are the Mirchi Cover Star and the Mirchi Top 20. Both of these, unfortunately, have missed the season and will now come back only in the next season. It's because of these events that we could not do in the quarter that my solutions business has actually come down. But otherwise, I think it's a pretty good and strong performance of the solutions business as well. Now, one of the impacts when the solution business goes down is on my digital revenues, because a lot of digital revenues emanate from the solutions revenues. When I do a television property, there's a lot of support and a lot of marketing muscle that I put on digital assets of the company for which the clients pay. So it boosts our digital revenues. So as the solutions business goes down, so do the digital revenues. Digital revenues accounted for approximately 6.4 crore rupees, only 6.5% of the quarterly revenues. This is down from the 12 or 13% numbers that we have scaled in the past. But again, it's a temporary phenomenon, and we remain on the path to achieving a 25% share for our digital business in the coming couple of years. Now, I want to make a couple of more statements before I open it up. On costs, I want to make a very, very strong statement. Remember that compared to pre-pandemic times, the costs in this year, FY22, which is the second year of the pandemic, the costs are down 91.6 crore rupees, almost 92 crore rupees compared to FY20. I mentioned in the past that we hope that almost 50% of this will be sustainable cost savings, and as evidence of that, I just wanted to tell you that in the year of FY22, the costs have gone up by only 0.8%, less than 1% compared to FY1, which means that the costs were initiated in FY21, but in FY22 we have also kept the control on costs very, very strongly. And like I mentioned, in 23 and 24, I expect at least 50% of this savings to be retained. So that I think is a very strong showing. And finally, we launched our business in Dallas in the US. There are three very important cities as far as Indians are concerned in the US. One is of course New Jersey as a state. Two is San Francisco and the Bay Area. And third is Dallas in Texas. So these three are places now we are present in all three. And through our online and app, we are present in all across the US, all across the Middle East, and therefore we believe that the business in the US and in international poised for strong growth in FY23. And finally, our digital platform. Remember, we launched in the US around the February 12th or 10th or 12th of February, 11th of February. We have been doing a 3-month experiment in the US without advertising, without any marketing support, just to study the consumer reaction. And I think some of the consumer reaction points are amazing. They are better than we expected. To give an example, every month consumers are spending as much as 270 on the app, which is remarkable because remember, everybody doesn't tune in every day. Most people would tune in a few times a week, and therefore it implies that they are spending a lot of time on the app when they come onto the app. The biggest contributor of listenership is our radio stations, which we stream online on our app in the US and in the Middle East. Now here is an important statistic that is relevant in this industry. It is called retention. Now retention basically means stickiness. So once you have attracted a user to your app, how many of those can you retain as time passes? To give an example, the 30th day retention is 7.3% for our app. Now this is double of the retention rate of most of our audio competitors who are there in the market. I don't want to name them at this stage, but you can pretty much guess. These are competitors who are bigger than us, who launched 3-4 years ago. They've raised huge amounts of money in the market. They've got crazy valuations, and they have a retention of far lesser than what we've got, which tells you that the app that we are about to launch has a solid that it provides to the users, which makes them come back to us again and again. And that stickiness is a very valuable aspect of any app. We are also going to be launching with about 800 hours of audio stories in India. We will be launching in India. And remember, 800 hours is not a big number, and we are very proud of that, because the biggest contribution that Mirchi makes is that it curates anything that it puts out. The user doesn't have to go through millions of hours of riff-raff to come to something good. So 800 hours of human curated content. We will launch with that, and then we will probably add about 100 hours of human curated content every month. And last point on the app before I open it up is that remember that the revenue numbers that our competitors in the app business generate are minuscule I'm told that the revenues per annum are between 2 crore rupees and 6 crore rupees approximately for many of these competitors of ours. Now for us, we believe that this is an easy hurdle to cross because of the solutions business that we run. We know clients, we know their needs in the audio product business. We have been giving them audio solutions. We are now going to be giving them app solutions. So we believe that this is a revenue hurdle that we can cross reasonably quickly. And I think that is the reason why we are so optimistic about our app business. When we launch in May end, we will give it a month to get feedback in India, and then we will be mounting a marketing exercise starting approximately from June. We will of course keep you informed about it. With that, I would like to open the questions. I've got Sanjay with me over here. He is our head of finance, and both of us would be happy to take your questions. So Lizanne, can you please open it up?
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Deepan Shankar Narayan from Trustline PMS. Please go ahead.
Good morning, everyone, and thanks a lot for the opportunity. So firstly, wanted to check about this digital revenue contribution. So we were expecting something closer to 20 crore kind of run rate, but we have been delivering only 6 crore kind of run rate quarterly. So can you provide us more light on what has exactly happened and how do we plan to scale this up?
Yeah. So, Deepan, in my introductory remarks, I mentioned why the digital component of the business fell. It is only 6% of our revenues in this quarter. And the reason I mentioned is that our digital business derives from our solutions business. To give you an example, when we do an event called Mirchi Cover Star, a lot of the push on Mirchi Cover Star is done on using digital platforms, external digital platforms, and also our sets on those external digital platforms. But when the solutions business itself falls, then obviously the subcomponent digital business also falls. So it is just a result of that. And I also mentioned in the call that it is a temporary dip, because as the solutions business, when I mentioned that the solutions business grew by 33% in March, and as it picks up in Q1 and Q2 going forward in this year, you will find that the digital component of the business will be back on the trajectory to 25% that we have been maintaining we will achieve in the next couple of years.
So what is the run rate we are expecting for FY23, sir?
See, I think in FY23, because solutions business is growing, I think we would be expecting the earlier peak that we had hit of about 12 or 13 to be surpassed. Like I mentioned, this is on route to 25%, which we should hit by about FY24, or I think we have said FY25. So yes, I think we should be crossing the 12% peak that we have hit in the past, Deepan.
Okay, sir. And so as you have explained about radio and solution business, gradually the improvement happened towards the back end of the quarter and particularly on March month. So have you seen such similar run rate growth in digital as well?
Yes, exactly. Because again, remember for us, digital is made up of products which derive from the solutions business, as well as direct digital, which is digital solutions that we provide to clients, or digital video content that we produce for clients, etc. All of that is back on traction. In fact, we've had a pretty strong April, but we'll talk about that at the end of the first quarter. Yes, but to answer your question, the traction is continuing in this quarter.
Okay, great to know that, sir. And finally, on this app spending per se, so the 6 crore kind of run rate will be maintained for the whole year, or we will see a further increase in the marketing spend?
Okay. So, Deepan, one that we are very clear about is that we would like the app to create its own user base. Now, you know that there are two ways by which apps are built or digital business are built. One is called the unicorn strategy, and the other is called the camel strategy. I'm sure you're familiar with both of these. Now, the unicorn strategy is not something that we are keen to follow at all, because that's like a gamble, and there are many failures for every bit of success. Remember also that we have a successful business already operating, and we are building the digital business on top of that. So the approach we are going to be taking is more similar to the camel approach, and therefore the spends that we intend to do on marketing or what is called consumer acquisitions will be far more limited compared to what you would expect typically from a new digital business to happen. Our focus, on the other hand, is going to be on providing exceptional content, which actually is what defines Mirchi. So we will be spending our monies more on the people who generate content, on the content production cost itself, and on app development itself. Now you will notice when you see the app is launched in India, and this is again a feedback with US, that the user experience on our app is absolutely fantastic. It's not cluttered, it's very intuitive, and it's also something that users are saying is very easy to use. So our money will be spent on content and on the technology behind the app, not so much so on the marketing side. And as you know, the biggest spend in a new upstart business is digital, is marketing spends, and that we will keep a tight control on. We hope to find a sweet spot where actually users start promoting the app themselves, so that if I am a user and I like it and I talk to 10 people and I can pull 10 people in, I mean, kind of growth that we are seeking in the user base. I hope that answers the question. So the run rate will probably be about the same, but it will be therefore tightly managed.
Okay. Thanks a lot, and I will come back in the queue.
Thank you, Deepan.
Thank you. The next question is from the line of Dinesh Joshi from Prabhudas Lilladher Private Limited. Please go ahead.
Thanks for the opportunity. I understand that this quarter was impacted by Omicron, and hence the on-ground activities were limited. Sir, but despite that, our production expense of 25 crores is higher than 10 crores that we reported in 3Q. So can you explain the reason behind this?
Yeah. So Sanjay here, Dinesh. I am taking this question. See, in this quarter, when we are reporting the numbers, we have seen, as Prashant has already mentioned, we have got two TV properties done. One is Mirchi Music Awards Hindi, one is Mirchi Music Awards Punjabi. Actually, it is three, and third is Mirchi Music Awards South. Now, these three TV properties put together, when we produce them, has got a bigger expenditure portion than the normal other than TV property solution products. So therefore, you are seeing a bigger amount of production expenses in the Q4.
Sure. And secondly, can you help me with the capacity utilization figures of legacy batch 1 and batch 2 stations for FY22?
Yes, I will provide you that. Before that, just going back to your earlier question, it is also true that in the production expenses, you will find another component, 6.3 crore, about which Prashant just informed this group now, that is related to the digital platform related expenses. So that is also a component. Now coming back to your question on the capacity utilization numbers for traditional radio business, I would first like to give you the first quarter numbers and then the financial year numbers. So in my top 8 metrics, the growth in capacity utilization is 25.3% over the same quarter last year.
Sir, I sorry to interrupt. I don't want the growth numbers. If you can share the utilization numbers, that would be more helpful.
Okay. So for the Q4 FY22 top 8 stations, I had a CU number of 104%. For 27 stations, I had a capacity utilization number of 88.8%. For my batch 1 stations, I have a capacity utilization of 76.3%, and for my batch 2 stations, I have a 29.9% of capacity utilization overall.
Sure, sir. And for full year, if you can share that corresponding number.
I'll just give you one moment, please.
And Jinesh, while Sanjay is calculating those numbers, I just wanted to make a small point, bring to your attention that the growth in the next couple of years is expected to be more driven by capacities and volumes and less by pricing. And therefore, I wanted to just recalibrate your expectation of volumes. Normally, we take 13 minutes per hour as our benchmark volumes, and then we express our capacity utilization figures basis 13 minutes per hour. Now, the reality in the marketplace is that during season, the radio stations operate at somewhere around in peak on peak days and peak weeks before Diwali or before New Year's and those kind of before Ganpati in Mumbai and those kind of seasons at typically about 250 to 275% capacity utilization, which is approximately 30 minutes of advertising or 32 minutes of advertising. So we believe that current numbers that Sanjay will give you for FY22, there is a big room for volume expansion left in the radio business still. Sanjay?
Yeah. So for the full year number, Jinesh, in my existing 35 stations, the capacity utilization stands at 74.7%, out of which top 8 markets accounted for 81%. I mean, that kind of capacity utilization we had. In batch 1 stations, we had 31.4% for the full year, and in batch 2 stations, we had 26.5%.
So, Jinesh, just to bring my earlier argument back to the front over here, that 81% in the top 8 stations, if we could sell equally well throughout the year, that 81% could become even 250%. If we could sell throughout the year. Now, what is it that we do not sell very well? We don't sell Sundays very well. We don't sell Saturdays as well as we do Monday to Friday. We don't sell April, May, June, July, August as well as we sell in the remaining months because of seasonality. So if we can, and television, by the way, sells uniform inventory throughout the year. So if we can improve the selling process in the whole radio industry, then the volumes are set to rise and there is enough headroom available for growth from volumes alone.
Got it, sir. One last question from my side. If I remember correctly, in the last call, we had mentioned that the Mirchi digital app was supposed to be launched in India around March. But I think in the initial comments you mentioned that the timeline has been revised to May, if I heard it correctly. So any specific reason for a delay, and is the March launch pretty much, the May launch pretty much on track?
Yes, the app is ready. It is under testing within our own internal user group. And we also decided to wait for a little longer for the reactions to come from the international markets. Therefore, we are now actually fully ready to launch. And while we have mentioned that May 30th is the date that we are looking at approximately launching, that's simply because we are trying to add a little more content, and there are a couple of more features which are under development. But we are ready to launch even today, and I think we will choose a date between today and end of May to launch.
Okay, sir. Thank you so much.
Thank you, Jinesh.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Sumit Rathi from Axis Securities. Please go ahead.
Yeah, hi. Very good morning, sir. I just wanted to check this run rate of 6.3 crore on digital or strategic initiative expenses towards digital platform. Can we expect the similar kind of quarterly run rate for the next few quarters?
Well, a similar question was just asked some time back, and I mentioned that we will be keeping a tight lid on the marketing expenses on the app.
Yeah.
But yes, you can expect something similar like this number to happen on a quarterly basis in the month coming, year coming ahead.
Yeah.
A little less, a little more, that kind of thing. Yeah.
Okay. So we should even out on yearly basis, like quarterly, they can be here and there, up and down.
Approximately, yes.
All right. Another set of questions that I had was, can you give us a breakup of core solutions and the radio revenue which we achieved in this quarter? I understand the growth rate in the radio was around 8%, which was impressive. But what exactly was that number? Can you give us that?
It's Sumit, it's there in the investor presentation, that deck that we have sent you, but I'll just give it to you. That out of 99.4 crore revenue, 65.9 was core radio and 33.5 was solutions.
All right.
And the radio grew at 7.6%. The solutions business was down by 11.4%.
Yeah, in the core solutions, which is comprising of digital,
There are three
solutions we have to write traditional and digital both.
No, wait. There are three components in our solutions business. One is what we call multimedia solutions, which is basically when we develop a solution for a client, we use more than radio. We use multiple mediums. It may be digital, it may be television, it may be on ground, it may be whatever. So we use multiple media. So we call that multimedia solutions. The second component of the solutions business is what we call IP solutions, which is largely on ground or activation that we carry to television for amplification, etc. That's called the IP business, like the Mirchi Music Awards happen or a lot of events on ground that happen. And the third component of solutions is what we call digital content solutions, which is where we design solutions for our clients, which are primarily digital led. And they may use videos, they may use audio solutions, they may be on public platforms, they may be on our platforms, they may be using external influencers, they may be using our own internal influencers, etc. And they may also be using many other products which are available in the market. For instance, we use Ghana very often, we sometimes use other audio platforms as well. So all of that is called the digital content solution business. So these three solutions, these three components make up together the business. And then there is the radio business.
Yeah. Makes sense. All right. So thank you. I'll be in queue and ask any further questions. Thank you for it.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Vishal Bagadia from Roha Asset Managers. Please go ahead.
Yeah. Thank you, sir, for the opportunity. So I had one question on the digital side, on the app side of the business. So what would be the content cost which would be incurred by us as a budget on the app side?
So Vishal, content is made in two ways. One, when we hire a content team. So we have a lot of people who are now hired by us and they make content. So it is reported as HR cost rather than content cost, right? And then there is content that we produce externally. Like when we launch our app in India, there will be a few marquee shows that we will be putting on the app. These are externally produced by celebrities and by other production houses. Those are reported as content costs. So in general, our philosophy is that we will be using both of these models, but our focus will be on trying to create most content in-house. Now remember that at the end of the day, there are 350 creative people already working in the radio business, already accounted for in terms of their salaries in the radio business itself, and therefore whatever extra content we can produce from our existing resources, to that extent comes to us free of cost. And therefore in a blended cost basis, the more the percentage of content produced internally, the less the overall content cost to the company. So that is going to be our philosophy, but we will be picking up marquee shows and iconic shows from the market.
So on the content which we would acquire externally, it would not be much of a cash burn for us.
See, when we are launching, we are launching with a few marquee shows using celebrities, and some of them are expensive, to be honest. But that's more to be a marketing launch cost rather than pure content cost. But the good thing about the audio business is that even externally produced content is not necessarily very expensive. Also remember that we offer a lot of production facilities on our own. So even externally produced shows will cost us much lesser than they will cost a normal platform, a platform that does not have the infrastructure of a radio company. So to answer your question very specifically, we expect external content costs to be reasonably tightly controlled.
Okay, sir. That would be all from my side. Thank you, sir.
Thank you, Vishal.
Thank you. The next question is from the line of Karan Tarani from Elara Capital. Please go ahead.
Hi. Thanks for taking my question. My question firstly was pertaining to the monetization of your digital app in India and globally. So of course, you have got this advertising, which will be playing on the app. But what about the pay-based mechanism? Are you exploring some monetization opportunity there as well?
Thanks, Karan, for your call, for your question, and it's good to have you on every investor call. So really appreciate that. Now answering your question, the app will have several modes of monetization. One, of course, is the advertising that comes on the content that we put out. And remember that pure advertising on the audio apps business, in fact, even on the music apps is very limited. And therefore, I don't expect too much revenues to come from pure audio advertising on the app. But like I mentioned, the way to get more advertising on the app is to provide it as a part of a solution, a larger solution to a client's marketing needs. So if an advertiser has certain marketing challenges, and when you're developing solutions to overcome those challenges, many times there are situations where the client can benefit from having his or her own audio solution or an app-based solution. And we've been doing that content generation for many years now. So we have expertise in that particular area. To give an example, if there's a client and who wants to, let's say, communicate with it's an HR initiative and they want to communicate with their 100,000 employees who are there on their various campuses around the world, I mean, we can develop a solution based on our app and make it available to them on the app. So we have other ways of generating revenues apart from pure audio advertising, and I think that is our core strength because we've been doing solutions for many, many years and we will build on that. Then there is also the transaction model, which is, remember at some point in time, we will be adding commerce to our app. We are already experimenting in that area, but we are some distance away from launching any of that at this point in time. But at some point in time, we will be doing that, and therefore there will be revenues which will come from transactions. There can be transaction-based revenues even on the audio stories that we have, even on the radio stations that we will put out, on the music that we will put out, etc. So that is another model that we will certainly be looking at. So, and then there's of course subscription at some point in time, depending on the kind of how the market evolves. I'm told that even in the audio OTT piece, there are some 70 million paying subscribers, many of them who come through the telecom tie-ups, but they generate subscription revenues in their books. So if the market opens up as it has in various countries around the world, then that also will become a revenue source for us. So, but primarily to begin with, I would expect most revenues to come from our solutions approach, a strength that our competitors do not have.
Right. Very insightful. So this is more of an extension of your solution business, that is going on.
Well, I'd say that it is built on the strength of the solution business.
Right. My second question was, in terms of content cost. So you've mentioned, 6.5 crore as the cost, but does that also factor in the music royalty cost? Because the music royalty cost is very high on digital. So are you going on an MG basis? Yeah.
Karan, we are not likely to offer music in India because of the same reason that you mentioned, because the music royalty costs are phenomenally high, and then we don't have any intention of becoming one more music provider in an already cluttered market. So when it comes to music products, we have music products that we are launching on other existing platforms. For instance, we have 17 radio stations already available on Ghana. So if there's a music aficionado who loves Mirchi curated content, then he or she can pick it up on Ghana or on other music OTTs. We have many podcasts and many music playlists which run on Spotify as well. So yes, so as far as music is concerned, it's not going to be the mainstay or not even going to be there on our app unless we are able to strike some deals with the film producers or with the labels or whatever it is. So then and only then will we do it. But otherwise, we are not planning to be like another music OTT app.
Right, but globally, I think, one of the reasons mentioned that globally you will be launching 12 stations. So, what about the royalties there? I mean, how will that work out, the math with the music labels? Because your live stations of Indian music will be getting played abroad.
Well, Karan, that's the beauty about the international markets and something that our regulators must take note of in India, that if anybody wants to launch any radio station or any playlist in the international markets, there are very, very reasonable priced offers available. Very reasonable price. I'll give an example. We are entering the Canadian market very soon, and the entire music royalty that we would pay for the first year, because we are just a startup and I don't think we will even cross 1 million streams in Canada in the first year, would be some 5,000 Canadian dollars in a full year. I mean, just imagine that and compare that with what happens in India, where the labels will start by asking you 10 crore, 20 crore rupees just as minimum guarantees, right? So it is sad. Just imagine this. It is so sad that in India you don't get any radio stations online. Amazing, isn't it? While anywhere else in the world you go, FM radio stations will simulcast on the online platform. So something that the regulators in India should take note of. But to answer your question, in international market, music royalties are far more reasonable, and that is what we are tapping when we are expanding our footprint globally.
Right. I just hope that something happens, because this is actually just very unfair in terms of the radios getting charged a very high royalty on the digital platform.
No, absolutely, and that is why there is some legal action we have started. We are hoping that the courts will provide us some amount of reasonable settlement on that issue. It will take some time, but the process we have begun already.
Just one last thing, if I can squeeze in, what is your view on this entire IPR, this PPL thing in terms of traditional music royalty? You believe any uptick could happen over there, or it's like status quo as of now?
Well, as far as I am concerned, that matter is now settled because the IPAB ruled on the matter. They set rates for 1 year, and they provided the basic construct on the back of which the rates would be gradually extended year after year. So the extension matter is now in the Delhi High Court. It is being heard. We have requested that the rates now be set for 5 years or longer. But the broad structure and the hard work has already been done by IPAB. So I think that the same structure would continue in the next 5 years. So as far as I am concerned, as far as sound royalties are concerned, the rates have already been fixed. Now, as far as performance royalties are concerned, again, various courts over the years have ruled very clearly that users like us do not need to take the license at all from IPRS. Because remember, what are we doing? We are playing just recorded music. We just play from a CD or from a track that the label makes available to us. So we are taking license from the sound recording bodies, and we pay them. We don't pay to the performance societies.
Right. Thank you so much, Prashant. Thank you.
Thank you, Karan. And Lizanne, if there are no other questions, then I think we should let the entire investor community have a nice Saturday.
Sure, sir. We don't have any more questions in the queue.
Okay, good. Then we can call this meeting to an end. And if I may just summarize and say that if there are any more questions that you would like to have, then our contact information is there in the presentation deck, and we would be happy to put out the answers to your questions. Thank you very much and have a great weekend.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Entertainment Network India Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.